Welcome to Real Talk, Real Estate Discussions with Andrew Kirsh. In each episode, Andrew interviews industry leaders. We'll hear their real-time opinions on today's market, their background and unique career highlights, and guidance for newcomers into the industry. You can find this show at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Now here's the host of Real Talk, Andrew Kirsh.
Episode 58 of Real Talk. I know I've spoken a lot about coaching my son's baseball team. I have to give a shout out to my daughter as well, Clementine, who crushed it in her dance recital earlier this month. She danced from 10 a.m. to I think like 4 or 5 p.m., 15 or 20 dances, and having an older girl and a younger boy, I get the best of both worlds of dance recitals and plays and singing and then sports as well. So it's a blessing. This week we have a very good friend of mine on the show and client, Vicky Schiff. She is the CEO of Avrio Management, new debt fund that she recently co-founded. Vicky has had a long and distinguished career in real estate, previously co-founding Mosaic Real Estate Investors, and before that, she was on the owner-operator side. So she just gives on our podcast, her perspective on what she's seen in the market, where she believes deals are getting done, and look, the fact is I've had 58 episodes. I think she's one of the only women on my podcast. I mentioned on the podcast, is that an indictment on me that I need to branch out and have more female guests, or is it a statement with respect to the real estate industry of not having a lot of female executives? Regardless, female or male, she is one of the leading real estate executives, and she offers a great perspective on the challenging times in today's real estate market. So I hope you enjoy my conversation with Vicky Schiff. Welcome to another edition of Real Talk. I'm here with my close friend, Vicky Schiff, CEO of Avrio Management. Vicky, how are you today?
Andrew, it's so good to be here with you. This is my second podcast of the day.
Oh, you're just a podcast professional, even more so.
I was the host of the last one, and now I'm the guest, so I love it.
So at the end of the podcast, I'll ask you, do you prefer being the host or the guest? Unless you want to answer that now.
Well, I'm a host of our YPO Real Estate Network because I'm the global chair of the Real Estate Network podcast. And so it's the closed loop system. Not everybody gets to listen. And what's fun about that is, people kind of tend to spill their guts. So I do a lot of prep and have great conversations, but it's much less frequent than yours. So I like your free-flowing system here where you just have conversations with friends.
We just shoot the shit, talk about whatever we want. I talk about my kids' all-star tournaments and what your son is doing. But
lacrosse.
Lacrosse. I love it.
Well,
I owe so much to you, Vicky, really with respect to on so many levels, but we'll start even with YPO. I mean, you and Russell Grossman were instrumental in in supporting me in YPO. And I remember having breakfast with you, and you even asked me, do you know anything about YPO? And I didn't at that time. And now it's amazing to think that I didn't know about it because it's so pervasive in my business, professional, and family life. And I know you're very involved in YPO. And so first, thank you for introducing me, and why don't you talk about how YPO has really helped you both professionally and personally?
Yeah, I mean, if it's of interest to the audience, sure. As you know, it's an organization, as other people probably know, it's an organization of CEOs globally, and real estate's just a part of it, not a big part, but a significant part. And just the amount of relationships that I've built, not only nationally, but internationally, and not even past real estate, it brings a different perspective because we tend to get I think everybody on a personal level tends to get at some point or another caught up in their own day-to-day little microcosm of wherever they live. We happen to live in the microcosm of LA, which is a big city. But I just love learning from other people, leaving whatever ego I have at the door and just being open-minded and learn so much. And in the real estate network itself, I've done a lot of business with people in YPO, and I'm currently the chair of the real estate network globally. So we have 6,000 members, and it's amazing. I have a huge board, which you're on, and you do a lot of service. And it's, I think, just in summary, great to have meaningful conversations with people on a heart level, that you're not afraid to kind of show vulnerability and not only celebrate successes, but also challenges together. So that's what it's kind of brought me.
Yeah, absolutely. I mean, I do a lot of business with YPOers, and when you find out when someone on the other side of you is a YPOer, there's a level of trust that I think is apparent that may not be there, or at least you can get to a level of trust a lot sooner than with others. Well, let's get into Avrio. To my listeners who may not know about Avrio, tell us what Avrio is.
Yeah, just briefly, it's a new debt business that was launched last year, and we're working on building that, and not anything dissimilar from what I did in my most recent past, but bridge anywhere from first mortgages to pref equity, little higher octane of rates, kind of get in and get out, and seeing a lot of broken capital stacks right now. So again, we're at the beginning of this journey with this company, and definitely a challenging environment to build something new. But we're moving forward and have seen a lot of transactions, and it's been, I've been in the market since 1988. And there's always some disaster for different reasons. Every time's a different reason, whether it was a .com or the SNL or the COVID or, other things, the banking crisis. But learning to navigate, not just for the first time, but for the fourth or fifth time, using some of the lessons from the past, I think is super valuable. And I know a lot of people that you talk to have decades-long experience, but I've also seen some of your podcasts where you're talking to some of the newer players, and this is kind of like their first shock of their career. And how do you really prepare for it? So I think, and lenders have their own issues across the board as well. And I always tell people in the real estate business, understand how your lenders are financed. Really, a really important question to ask, because there is a transparency that you usually don't see, or there's a world underneath the ocean surface that you generally don't see as a borrower. And it's important to understand the motivations and pressures that lenders can have themselves. So being in a position where we don't spend half of our week trying to figure out how to solve problems, but rather look at new opportunities, I think is very valuable.
No, absolutely. I mean, you make a great point. We work with a lot of private lenders, debt funds, and seemingly every year there are more and more debt funds. It's a business to not to replace, but to supplement where the banks fall short or cannot lend, when Fannie, Freddie, or CMBS cannot lend, and that market just seems to get larger and larger, and a lot of borrowers take for granted that their lender will be there at the closing table. And it's a question that borrowers will ask me, have you transacted with these lenders before? Have they performed? I mean, those are questions that should be asked, right? That it shouldn't be taken for granted. And I know you're a serial entrepreneur, and we've worked in the same office. You are a subtenant of mine. I like to say co-tenant of mine here in 1880 Century Park East, and with your prior debt fund, Mosaic. And so I guess the question really is, you launched that business 10 plus years ago. How is it launching a debt fund today versus when you did over 10 years ago?
Well, I think there was definitely less players in the market 10 years ago, and it's hyper competitive. But more than that, capital, particularly in the pension fund world, is very cautious. So, I've spent lots and lots of time with the large pension funds across the country, not only in this iteration, but in previous iterations. My first fund, I had 5 large state pension funds as investors, and they're dealing with a whole lot of, a whole lot of uncertainty right now. And I would say that every large pension fund, whether it's direct or indirect, has exposure to large office projects. And I don't think a lot of the investors out there, including the lenders, have taken their marks quite yet. And everybody said, oh, there's this big barrage of opportunity coming, but we'll see. Multifamily, obviously. I'm not going to say anything that's controversial or you haven't heard 1,000 times in the last month, but obviously capital stacks are deeply broken in multifamily, but not for the big firms, right? For the syndicators, the big firms can weather the storm because the demand is there, albeit rents have reversed. But people that have big office portfolios, man, that's, even if it's Class A, there's probably 20 buildings in the country that, like one Vanderbilt, that are in its own category. But other than that, there's definitely issues. And I've seen some write downs up to, 80, 90%. And as you know, I sit on the board of a couple public companies and also serve as an advisor to several private companies. So I'm also watching, from that point of view, what they're looking at as potential opportunities as buyers. And that's an interesting seat to sit in, to just see what's coming through the pipeline and what transactions get done. And not as robust as you and I talked as you would think it would be at this point. But I think that's everybody just fearful of, I just lost a bunch of money and I got to admit to it. And I don't think, I was on a podcast this morning with Andrew Siegel, who office building owner. He has a very unique strategy. He thinks rates are going to go up again twice. He doesn't think rates are going down.
This year or before they even come down?
Before they come down.
Yeah.
So for a lot of macroeconomic reasons. So, he's admitted he's been wrong lots of times, but what if that happens? Everybody was counting on X this year, X amount of rate cuts. That hasn't happened. So what's going to happen? And how long can people hold out? And that's the real question. And I think the bigger firms that are well capitalized, or the professional firms, like someone that owns 20,000, 30,000 units, or someone that owns and that they have more permanent capital, or they're in a closed-end fund structure, or someone that owns lots of office and has a staff that can deal with issues, is in a much better position to weather the storm if their leverage is conservative than a syndicator or someone that owns like 3 office buildings and 2 shopping centers and has a mishmash of a bunch of different things and a small operation, and raises outside capital. That I know you've had some guests on that do that. I think that that's a very, very difficult position to be in right now. I would not, as challenging it is to start a new company in this environment, which you asked me that question. It is challenging. I wouldn't want to be some of the other people that you and I know, just because, wow, putting your head on your pillow at night is a stressful exercise in what's going to happen tomorrow, right?
Yeah. Yeah, it's a funny market in that it's so hard to raise money. Institutions are still really on the sidelines. Yet my clients who are bidding on multifamily deals say that there's, quite a number of bidders, that pricing hasn't really come down for the good product. And, who's capitalizing these deals? Because I know the institutions are not. So discretionary capital, those that have raised funds over the last couple of years. Syndicators are having a tough time completing their equity raises. So people who are flush with capital already, discretionary capital, are able to make these offers. We're doing quite a lot of transactions in the office space of purchasing distressed notes, but no institution is going to finance those deals. So you need the current lenders that are in the stack to repatriate that money and essentially give seller financing, although it's really existing lender financing. It's just an odd market. And so I guess where you guys sit, are there certain types of deals that you're focusing on at Avrio?
Well, yeah, I see a couple opportunities in the marketplace overall. One is, taking construction lenders out of assets at C of O because they need to get out and the property's not primed for an agency loan yet. So there's a bridge, but you got a new product, and perhaps that borrower's got to put more capital in because it's simply not worth what they probably built it for. So there's that, but there's still issues to solve within that equation. Then there is the trade, somebody buying a new asset at a discount, and that in the multifamily world is a complicated question because, okay, this is a very funny analogy. I was listening to this TREP podcast this morning, and they said a TREPwire, which is fantastic if you're a nerd, a finance nerd. But they said that the assets that are coming to market on the multifamily, it's kind of like going to a sushi bar and say, bring me all you can eat sushi bar, and just say, bring me whatever you want. And you get like a carp from the bottom of, Lake Erie, the Toro. So the stuff that actually hits, the market is either going to be priced to perfection and it's great and there's going to be bids on it, or it's just like a mess, the downward inward spiral of no capital, stuff getting the CapEx for an apartment building getting pushed off. Then they start losing tenants. Then they have to reduce the rent. There's this downward spiral that we see coming, but I don't think that, those assets are quite trading at deep discounts yet. But I think those will come. So I think that's another interesting opportunity for a lender to look at financing an asset at, certainly 30% below the value it traded at yesterday. If the demand is there and you can underwrite today's rents, and perhaps the borrower just has to take less debt. And certainly at some point, there's a couple of years of pent up product that needs to get leased up and in the multifamily space. And that product is probably going to lease up at below the underwritten rents. But once that gets absorbed, we're going to need more housing. And so I think at some point in the not too distant future, I think construction lending is a really interesting place to be. And I know that the well-capitalized funds are doing a bit of that. I've seen MSD, I think they just did a big loan in New York or Florida, and some of these really big deals are getting done on the construction side. But some of the construction lenders, like the biggest ones, maybe not the biggest banks, but the biggest construction lenders are starting to see cracks in their books.
Do you think there's something that needs to happen for sort of the floodgates to occur of transactional volume? I mean, whether it's distress, because the real distressed activity that we're seeing is confined in office,
right?
Some multifamily, but not much. So whether there's like a deluge of distressed activity or any type of activity, because right now we're in this I don't know, this choppiness for 2 years where I see glimmers of hope that transactions are going to move forward at a higher volume, but we're not there. So I guess the question really is, what from an institutional perspective, what do people need to see in order to transact?
The owner runs out of money and the lender is impatient. No more, I'm going to work with you. There's a big borrower that everybody talks about. We all know who they are. And they had a lender who put more capital into their assets in the form of pref equity. So they had the loan, and then they had some pref equity, and now that basically that lender's in that asset for probably 100% or more, and the borrower has no more equity in it, and they may still be getting capital calls. When are those investors? I mean, I get capital calls on some of the stuff that I'm invested in. When am I going to say, no, I'm just throwing good money after bad, I'm not putting any more capital in, and they don't fulfill the requirements of the loan, and they simply have to either sell it at a discount, recover whatever they possibly can, and give the lender a discounted payoff if it's not recourse, or they walk away. Like,
Yeah.
those are the things that have to happen. It's just like I'm sipping out of a straw underneath the ocean, and I can stay, my straw's, made out of paper, and it's actually disintegrating, but it hasn't yet. I feel like it's something like that both sides have to be, there's no choice left, right?
Yeah.
There's the optionality goes away. And I think that's when things start to move through the system. But again, you're on the legal side, and you're seeing clients come to you, I'm sure, with modifications and workouts. And how long do you think those workouts how long do you think those borrowers live to see another day with the workout terms that they have in place? Is it a year? Is it 2 years? Is it 5? Is it 6 months? Is it just kicking the can? Like, what is it? So I think when either side is like, I'm being a realist, there's nowhere else to go, and we just have to move this asset off our books.
Yeah, well, I was on the phone yesterday with a client who has an empty office building that's relatively new construction, well located, talking about strategies, how to deal with a impending maturity date. And, they're talking about putting in more capital. And I said, wait a minute, you're going to put in more capital? Well, you're 99% ahead of every other office borrower who's not planning on putting in more capital. So there's so many different ways to negotiate with your lender, that there is no one size fits all. And at the end of the day, you have to have conviction in your business plan, so that you're not just spending good money after bad. So that whether it's 12, 24, 36 months from now, however long that lender is going to give you, that it was worth it, that you feel like at the end of the day, the lender's going to get repaid, and you're going to make a decent return. If not, then why just cut your losses, right? And just move on. And some of my clients,
I think it's kind of face the brutal facts time. So, I've talked to borrowers who would have larger portfolios, and their attitude is, okay, I'm going to take the emotion out of it. I'm just going to simply be objective. I own 50 assets, 20 I don't want. I shouldn't own them. I don't want them. They're not accretive. They'll never turn around. How am I going to deal with those? And call the portfolio down to something that is, from a long-term perspective, viable, but really having the guts, I guess, to say, I failed, right, on these assets. And maybe it's a little bit of me, maybe it's a little bit of the market, maybe it's a little bit of lots of things, but it's time for me to move on. And I think that's what it's going to take. And the people that do that the quickest are going to win in the long run. But then it also depends on, what's your portfolio look like? What's the size? If you have 5 assets and they're all underwater, like, you're dead, right? And maybe you want to pretend for a little while with your investors that everything's just going to be fine, but there'll be a day of reckoning. So being strong enough to take that day now, particularly if you have a portfolio that you can parse and say, no on this and yes on these. These are where I'm going to spend my money and my time, and these I'm just going to move on. I don't know if you're a YPOer yet, but many years ago, right after the GFC, we had one of the top funds managers has a crazy personality, and we all love him. I won't mention his name. Come in and say, I spend 1 day a week dealing with my problems and 4 days a week moving forward with growing my business. And that 1 day a week is painful, but I schedule it because I know it needs to be done. And then he's obviously lived to fight lots of other days and is very successful. And I think it's difficult, really
Absolutely. Look,
really.
with the same clients, in 1 week, I'm working on, defensive positioning and maybe giving back assets. And in the same week, we're working on acquisitions of new opportunities. So a lot of my clients are playing defense and offense at the same time.
Right.
And that's just the nature of where we are today. Curious, Vicky, you've played in and worked in all aspects of the capital stack, from the lender side over the last 10, 15 years, from the equity side, the sponsor side. What do you enjoy the most of what position?
As you might remember, I grew up in the real estate industry. My dad was a developer in Las Vegas. He moved there in 1949. And I just love the bricks and mortar side of real estate. One of my most satisfying loans I ever made, or we ever made at Mosaic, it was a team effort for sure, was the Pendry in Park City, because I own a condo there, and I'm there a lot. It's a super successful project. It's sold out. And when I go there and sit in the restaurant, I'm seeing kids running around and a band playing and like people having a great time. And the owner, Brian Shurkin, who's a dear friend and someone well, just, we've had these conversations like, without each other, this would have never happened, because the persistence he had to lay down to get that deal done in the first place was like almost impossible. And without our debt capital, it wouldn't have happened either, probably. So that is like a joy that brings, such satisfaction and happiness to me, where I see when things work out, the human use of real estate and the activity and the kind of accomplishment that happens within that ecosystem is so fun. Obviously, when it doesn't work out, you have like some empty office building downtown LA, which we had as well, is quite painful, but I love the real estate industry. Like it's all I've really ever known. And I absolutely love it. Love the people in it. And as you know, it's just so many personal friendships come out of just the people in the industry. And we're our own like weird breed. And at this point, I don't know how to do anything else. So I won't say quote old, but I've lived too many years to start over and do anything else. So I love it. I love the industry.
Yeah, well, I do feel that within the real estate industry that people are willing to help each other and share openly, because there is no real proprietary technology when it comes to the real estate business. Now, there are technologies that help the real estate business, but like Placer and Yardi and other technologies. But in the end, it's the same business that I'm sure your dad and his dad and for hundreds of years we're doing. And so I think that's what's sort of nice and open about the real estate business. But one observation that I do want to talk about, and obviously you're one of the leading female executives in the real estate business. I've had, maybe close to 60 podcasts. I think you're the second or maybe third female. Now, maybe that says more about me, and I need to branch out and have more female guests and have more female clients. And but also when you look around, conferences and YPO real estate, there's not a lot of women at the top level in the real estate business. And I know you're a champion of trying to have more women, not just be in the real estate business, but be at a leadership level. So I guess, can you talk about why there still is a disparity of a gender inequality in real estate?
Well, first and foremost, I think it's a finance business. And I teach real estate finance in university, and I teach entrepreneurship at UCLA. I would say my entrepreneurship classes are like 30 to 40% women, and my real estate classes are maybe 10%. So I think there's something about being attracted to finance overall. And I don't think it has to do with capacity. Mental capacity. I think it has to do with just culturally. I I just don't know. I think that I have a group of women. There's 45 of us. We're all either CEOs, managing partners. Some of them run some of the biggest funds in the world. And we've had conversations together. I've always been an entrepreneur, but a lot of them came out of Goldman or other places like that. And, we had the conversation about this, and they say sort of sometimes mid-career women have to make the choice of when they get married, whether they want to stay home with their kids for a certain period of time. And sometimes they do, and they never come back. So I think we need to be better at supporting women in the workplace to grow and thrive within organizations, in growing their own career, in advancing their own career. Now, like the head of real estate at Blackstone is a female, right? The president of Bentall Green Oak is a female. So they've obviously made it. I mean, Sheryl Sandberg is a female. So they've obviously made it in very male dominated, but it takes a certain kind of mindset, I think, that is maybe more prevalent with maybe more prevalent with guys than girls, but I don't think it's any harder. I think that if you're competent and you have the intellect level, my attitude is always widen the net and make an effort to look for someone that doesn't look like you, but don't compromise your standards. Just like in YPO, we have standards. Like your company has to have this much revenue. You have to have these qualifications. We don't compromise in YPO on standards for members. And we have about 12% members, women globally. And that's every business. But what we do for women in YPO is we push out the age where you can join. So sometimes it takes women a little bit longer to get to those senior positions. So I don't know whether it's hard. I just think that women need mentorship from other women, and women need mentorship from men. When I started in the 80s, nobody ever said to me, ever, and I worked in an investment firm in the mid-90s, no one said to me, oh, you're female. They never made a big deal about it. It was never brought up. And now I think it's brought up so much, it could be counterproductive. I think.
Do you feel there's gender discrimination in the real estate industry? Or is it that for whatever reason, like you were alluding to, we're in the college or the courses that you teach, you're just seeing not as many women go into this industry?
I wouldn't use the word discrimination. I think there's natural stylistic differences, right? Some of the comments I've gotten from cohorts of younger women is like, I'm in a meeting and I say something, and then the guy next to me says exactly the same thing, and the CEO is, oh, that's a great idea, but just glossed over. So I think being less sensitive, being verbal, being strong, just like any guy would have to do to make. It's not like men don't suffer in the business world. It's not that they don't get beat up. Everybody gets the shit beat out of them, some more than others. But I think it's just saying, hey, and figuring out who your audience is, who you're dealing with. But I think it takes that inner strength to succeed in anything. Do I think there's discrimination? I think there's different ways that people treat each other, whether they're female or male. I just think there is. I don't think there's anything wrong with it unless it's detrimental to the other person. But there are differences. And I think celebrating those and capitalizing on those. For example, and I'll leave it at this, if I go to a conference, I'll wear a red dress. I'm talking about an investment conference, not, somebody that's in the asset management or fundraising space. And I'll say to somebody, oh, come find me. I'm in the red dress. And they'll walk up like at IMN in Laguna or something.
Right.
There's 95% guys in suits or whatever they're
navy blue jacket,
vests with their company logo, whatever they're wearing. By the way, don't ever wear those. You stand out more. You get meetings easier.
Use it as a positive.
Remembered, you're remembered more. There's a lot of big advantages to being a female in the real estate industry, and
Sure.
learning how to, I wouldn't use the word exploit, but how to work with that. But you better know what you're talking about when you walk into a meeting. You better know what you're saying, and you better bring value, just like anybody. Better bring value. So that's
Well,
it. That's my soapbox on being a female in the real estate industry.
You can speak for all women in the real estate industry. No, it's look, I believe it's a meritocracy, but I wanted to obviously get your perspective. And look, Vicky, known you for many years and in so many different facets of our lives, of from YPO to attorney-client to friends to co-tenants, and I just really appreciate you coming on and taking a part of your day. And I'm sure you've got 4 more podcasts this afternoon to be on, and maybe
I'm done with the podcast for the day.
And maybe CNBC in the middle. But you're not just a leading female executive in the real estate industry. You are a leading executive, right, in the real estate industry. I know a lot of people look up to you because of your experience and success. So look, much success still to come with Avrio and the boards that you're on. And thank you for coming on to Real Talk.
So great to see you, Andrew.
Appreciate it. All right, take care.
Okay, bye-bye.
You've been listening to Real Talk, Real Estate Discussions with Andrew Kirsh. You can catch prior episodes at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Thank you for your positive reviews, comments, and for sharing the show with others.